How to fix if you're losing money trading. If you stop watching the market for 1 week, will your strategy still make money? If not, you don't have a strategy, you have hope. And in trading, hope is expensive. Hi guys, I'm Stoic Stock Trader. I have 4 years of experience trading the markets, and in this video I'm going to tell you something which happened with me. So, have you ever seen a stock move in your direction but still ended up losing money? It's one of the most frustrating things in trading. You spot the move, you're right about the direction, but you end up red. Today, I'm going to tell you exactly a story about how I kept falling into this trap and for almost a year, and the exact thing I discovered that finally flipped my results. Also, when I started trading, I thought all I needed was to predict the market. I was obsessed with finding the perfect indicators, Bollinger Bands, RSI, MACD, you name it. I would get excited when the setup looked perfect, only to be stopped out within minutes. But then something strange happened one morning while I was trading the Reliance stock. I had my usual setup, but the price moved sideways before breaking out, and for once, I didn't get stopped out early. That was the seed of my discovery. What I realized was this: I was focusing 100% on the direction and 0% on market context. Think about it, if you're driving, it's not enough to know what the road goes straight. Think about it, if you're driving, it's not enough to know that the road goes straight. You need to know about the traffic, the speed limits, and the roadblocks. In trading, that means understanding where the market is in the bigger picture. And that's where this pattern comes in, something I call the impulse, pause, continuation pattern. Impulse. You see a sharp, clean move in one direction, usually on higher volume. This shows you that big players have stepped in. Pause. Instead of chasing, you wait. The market breathes, pulls back, or moves sideways. This is where most traders get shaken out or FOMO in too early. Continuation. When the price breaks past the pause zone with volume again, that's your high probability entry. Why does it work? Because you're not predicting anymore. You're reacting to confirmed market strength twice, not once. Let me show you a live example. Uh, so this is the Nifty 50. I'll just show a very basic example. So in this, basically in this chart, 8th August. Now instead of jumping in, what I marked was the previous resistance, which was here. This zone. And when price took a pullback here, and after it broke this low, I shorted with the stop loss here. So what this did was, I controlled my entry. I did not enter in these candles. I shorted here. My stop loss was this, and by day end I got my target. You know, it was a 1:2, 1:3 risk to reward trade. Now, before you run off to trade this tomorrow morning, let me warn you about a few mistakes I made early on. Entering before the pause completes. This kills your win rate. If you enter here thinking that, oh no, maybe the next candle would have gone up. Also stick to high volume names. That's the reason why I do index or stock trading only. This simple shift basically from predicting once to reacting twice changed my trading completely. I stopped over trading, my stop losses became tighter, and most importantly, I stopped feeling like the market was out to get me. You don't need to predict the future, you just need to identify when the right kind of traders are already in the move and ride with them. If you found this useful, I'll be sharing a lot more real strategies, patterns, and even ways to automate them over the next few weeks. Subscribe if you want to catch them as soon as they drop, because the next one is going to be even more actionable.